Well, it's the night of the global PMI, and there's a lot of data that's actually coming in that's going to be very important. That should be affecting, well, the price of silver maybe somewhat, but really affecting the equities markets more than anything. And number one thing that came in is the Chinese PMI, primary manufacturing index. It's already in as we speak. It's after midnight or something, right? On the Monday, Monday morning in the wee hours, I guess you want to call it. So, Chinese primary manufacturing index is down slightly. So, that was expected. But that also weighs in very heavily on the emerging markets. And, it's not really rocket science that the Chinese PMI would be down because their main exporter is to the Eurozone. And the Eurozone has very high unemployment, so basically that's who's consuming a lot of the Chinese exports. So, ergo, what do you figure, right? Now, also, other data that's going to be coming in is car sales, global car sales, and global construction. Now, let me put it to you this way. Global construction, the construction industry is roughly, with the corollary real estate industry and everything that's around it, with all the professional people, legal people, and everything that's around it, the marketing people, it's about 50% of the entire economy, which includes 50% of the global economy, construction and real estate. So if that's down, let me put it to you this way, ergo 101, how the hell could the equities always be going up for so long? We've had the third largest, longest bull run, consecutive bull run in U.S., in the last 100 years of U.S. financial history. Now, it looks like the markets are turning around the other way, but you really don't know. I mean, that's a couple days. We had some down days. It's still not too far from 16,000. But, like I said, if it continued on in a bull trend up to, say, July of 2014, that would be the second longest bull trend in the last 100 years of U.S. history, financial history. The longest bull trend would have been in the 20s, which had laissez-faire capitalism, small government, and a lot of entrepreneurship, and a lot of new things coming on with machinery and tech, and a lot of business competitiveness going on. So it's not even the same type of climate as the 20s as it is today. But basically, our stock markets are being pumped up by Federal Reserve policy, which is in cahoots with the Wall Street elite. And let me just put it to you this way, I always get disgusted when people talk about the 1%, because the 1% really, really aren't the problem exactly. It's more like the 1 basis point, or even narrowing it down smaller than that. Because when you look at the 1%, within that 1%, you have the bottom half of the 1%. They may be your really competitive entrepreneurs. They could be professionals. They could be financial managers. They might be those type of people. They might be CPAs, lawyers, or whatever. People that worked, doctors. People that worked very hard in business, and they got high-end clients and things like that. And they got they make $400,000 a year, $300,000 a year, and that type of stuff. And they got like $1.5 to $2 million. But when you start talking about the upper half of that 1%, you're talking about $5 million. And if you get into the 1 basis point, you're talking about $20-something million each. 1 basis point being, the 1/100th of 1%. And when you get into that, you're going to find out those type of people are highly connected in the financial industry, and they also have a lot of advanced warning on what happens in the economy. And where they make money mostly is not just by, they're smart, they're aggressive, they're on the ball and all that type of stuff, but they do have a lot of edges in their favor because they know the inner workings of the casino, more or less. In other words, casino being where capital goods, capital assets, let me put it this way, capital assets are going to change in direction, in price valuation. And that's really where the 1 basis point makes most of their money. They don't really sell a lot of widgets to somebody. It's off of capital gains. And that's actually where you have the best tax advantage too. versus ordinary income. Correct? Is that not true? In other words, if you're Joe so-and-so having a lawnmower business or whatever the hell it is, even if you have your subchapter S LLC or whatever, and your income is being going through that, you're still subjected to a lot of ordinary income tax because it's all income. But if you make a capital gains transaction, or if you may do a like-kind transaction, those type of things, you're subject to a hell of a lot less tax, and you can make much, much, much bigger gains on that. And actually, there's even these deals that a lot of people aren't aware of, but they'll do large. I wouldn't even call this to 1 basis point. It's like even beyond that. They'll do stuff where they do like asset swaps, like they'll swap some Greek islands for something else or whatever the hell it is, and basically it's all off the tax rolls. And of course, you have entities like that are set up in the BVI, the British Virgin Islands. You might see a lot of UK businesses in there. There's also in Europe, and I also talked about the Russians, the oligarchs doing a lot of business through Cyprus, because basically that was like the European version of the tax haven, because they had a much lower tax rate on capital gains, especially I think in commodities. I'm a little fuzzy on this stuff because I forgot about a lot of it, but there is a lot of tax advantage in Cyprus. So this is really where they got a lot rigged in their favor. Now, I'm going to say this about silver. First off, I know a lot of people, it depends on who it is. Some people snicker, laugh at it, whatever, and, because they think it'll never go up or down. But I'm using common sense, because I think the real bubble that is looming is going to be in the actual bond market, the U.S. bonds, the government paper, the U.S. Treasury, and the U.S. dollar. It's actually what's going to come into play is going to be the question to the full faith and credit of the U.S. government. And this is where precious metals are going to go way up, and actually way past the fundamentals, because people will panic. And if you are holding precious metals, a little common sense 101, it does not cost you basically anything practically at all to hold the precious metals. There's no maintenance charge really that much. Depends on what you're holding or where you're holding it, or if it's electronic or it's in storage or whatever. There's no real danger of it deteriorating like other capital assets. If you're holding some other capital assets, sometimes there's always danger of, if it's buildings or whatever the hell it is, that you might have to do roof repairs or painting or whatever, siding or that type of stuff, electrical work, or you maintain the sprinkler systems and taxes and the real estate taxes. You don't have any of those problems. Yes, of course, the disadvantage is it doesn't have an income flow to it, but it's actually very liquid. There's no closing fees involved in the type of transaction, that type of stuff. And when there is a bubble breaks in the U.S. dollar and in the U.S. treasuries and in the bond market, and the government does declare default, because it will, because interest rates will not be able to held down forever, and when they go up, there's going to be a default. That's simple. You will see massive gains on silver and gold all at once. A lot of times people are looking at it and saying, no, it's never going to happen. But, I just remember so many different things that happened in the markets in the past, and how people were very, very, very overconfident in trends. Trends one way or the other way. They were confident that, when something's going up and it has a history of going up, that it's continuing to go up. There's people who had a high degree of confidence in the real estate market for various reasons, and they expected the trend to continue. In the cases also with right now, it looks like, actually those in the know who are bond traders are being kept awake at night, because they do see cracks in the system. But a lot of times they think in U.S. treasuries and U.S. bonds are very safe right now. They're not. And when the things change, it changes drastically. We've seen this always happen. We've always seen this happen not just in the equities. We've seen this in the tech bubble. Tech, they gave you thousands of reasons why tech should go up. It should go up. It should go up. You know, we're probably going to see this in the Bitcoins. There's a lot of reasons why Bitcoins is probably going to get hammered. Not the concept of electronic currencies, but probably Bitcoin specifically is probably going to get, it is already getting hammered. It's probably going to get hammered a lot worse. And I've had some comments on that, you know, since I warned people about a bubble, they would have missed out on gaining, you know, 500%, but maybe not. I don't, like I said, I didn't know how much higher it would go, but, you know, I could also say people missed out on 1,900% from Nestor stock, too. They had 19 times gain in that stock. 19 times, so you missed out on that. So, you know, it's almost like if you had 20/20 vision in the markets, you know, you could start out with $100 and be have $10 billion inside of a year if you're that damn good. But you know, it's quite obvious that a little common sense goes a long way. And when you're looking at bubbles, you know, it's pretty obvious to recognize one. It's just that you don't know when it's exactly going to break. It's always at the end of the bubble. Things really go really fast. But what's going on right now is basically we got a debt bubbles going on in throughout all the governments in the world. And this is where the precious metals are actually going to come into play and actually do extremely well all of a sudden. All of a sudden. The problem is, you know, I don't think the dollar, the U.S. dollar, is going to totally disappear completely. You know, I don't buy that scenario. And, you know, this is one place where I would differ very much so from the precious metals type people, because they will state to hold on to precious metals at all costs. I will not do that, to tell you the truth. There will be other assets that are going to be going down in price, even as we have inflation, because as I mentioned before, you know, some economists call this disinflation. It's a stupid word. It's actually hyperinflation. When you have hyperinflation, you'll have hyperinflation, particularly in areas that people have to have, which is energy and food prices, the day-to-day items. But what you will have is if items going down in price, it'll be deflationary in big-ticket items that people can do without and forestall buying. In other words, like houses, cars, and things like that, and big-ticket items are maybe like furniture or whatever the hell it is, you know, home improvement, large capital home improvement or whatever. Real estate might even be dropping in certain areas unless it's farmland or something that has to do with food production. But that is where you would want to sell your metals and go into those type of capital assets that have depreciated. You know, something that would relate to whatever businesses that you're doing. Now, I'm going to state this: the way to put the squeeze on the 1 basis point is actually to stick in the 101 common sense basics, and that is to stay in with being independent. You know, you think these small things don't matter, but I always will continue to put a lot of videos on how to do things and actually shave a few dollars of expenditures out your pocket. You know, in other words, dollars that you will not have to spend as much, where you will actually be able to minimize your expenditures more and more, so you will not get caught in a cash crunch, because this is actually the way to squeeze the 1 basis point. You see, there's one problem with the elite, that they outshrewd themselves, really what it comes down to. They do need the productive middle class, because no matter how big they get, they always, even if they're making money by capital gains, they have to have capital gains to sell to somebody else, of course. They have to have a market. They have to have a market. Whether it's capital to sell their capital to, that they want gains on, or whether it's to sell their products to, they have to have a market. So when they squeeze everybody too much, what it does is it causes a collapse in their own source of revenue. And, you know, it's almost like they're sitting on it. You know, the elite aren't really on an island by themselves. They need everybody else. That's really what it comes down to. And the way to squeeze the elite actually is not by the numbers. Not by the numbers per se, but by the numbers, by the things that have real value that they can't read on a spreadsheet or actually read and see what you're doing. Because there's a lot of ways people can economize without sacrificing any kind of decrease in your lifestyle. And it could be very minor things. It could be from how you clean your house. You know, sometimes people spend a lot of money on cleaning products for this and that, and it's like $5 for this bottle and $5 for that bottle and all this kind of garbage. Whereas you can use the old standbys of baking soda, vinegar, and pneumonia for cleaning your house, and it's pennies on a dollar. So when you add up all these little different expenditures that regular people have on a day-to-day basis, it takes it away from the corporate giants like, I don't know, give you one, Procter and Gamble, right? I mean, I'll throw them out there. I mean, not that I'm picking on them, but, you know, they seem to have an empire built upon selling things to people that people need, and actually you can go back to square one. Well, I'll just throw them out there as an example. Like, for instance, they're a corporate giant. Somebody on the top there has a hell of a lot of money. You know, it was, you know, you had Arm & Hammer was one of the guys way back when. And, you know, if people went old school and went with baking soda, vinegar, and ammonia, most of the products that are out there, that are household products and personal care products, would be out the door, right? Is that not a fact? And would it decrease your lifestyle? No. No, because most of these products have been pushed by marketing and hype. So anyway, you know, that's why I'm going to stick with some of those type of videos too, because they're very, very important, and also with the health videos. But that's a good way you can actually cause the elite to have a problem, because you can actually be keeping your money in your pocket and not putting it in their pocket. That's another important consideration. But do hold on with your silver investment, because what will happen is, you know, it'll happen unexpectedly all at once. There'll be, you know, let me put it this way. There's $17 trillion in debt in the U.S. government, right? That's not including unfunded liabilities. You know, I don't know how much is in really in the workforce, but you say we got 300, you know, I didn't even look these numbers up for a while. I forgot what the hell they were, but we got like a little over 300 million people in the U.S. I don't know, maybe we got 60 million of them are working, you know. And you divide that up into the 17 trillion, that's like saying 6 people owe $1.7 million of government debt. 6 people. You know, and that's not including unfunded liabilities. And that's a real rough estimate. But, you know, when you put it that way, it tells you what the situation is. So if interest rates go up, it destroys everything. And it will go up. They're going to have to go up. Or, you know, and what's going to happen is the only way they're going to stave them from going up is they're going to have to keep buying more and more of their own debt, because China's not buying it anymore. And the game's going to be up. Problem is, we don't know exactly when the game is up, but I think when it happens, it's going to happen very quickly and very suddenly. Just like everything that seems to happen in the major markets, it happens all at once. And you got to be ready for it. If you're not positioned for it ahead of time, you miss out. That's all there is to it. So anyway, stick with your investment, and you will find out that it's actually going to do extremely well for you, because it's, you know, I have a fear maybe of having an excise tax on gains in precious metals, but, you know, as of right now, they aren't talking about it. And for them even to talk about that, there's going to have to be gains of like several times. So in any case, you're still going to make out like a fat rat if they even do excise taxes on precious metals in the future. If they do excise tax on precious metals because you had capital gains, that means you had a hell of a gain. So I do expect this to happen, because I think the next real super bubble is actually the bubble of all bubbles is going to be in a bond market. In a bond market. And nobody's going to want U.S. debt. That's why, in short, why the metals are going to go up that high. And once the money starts pouring into metals, that's going to take a bubble of its own too. We're far from that area, but it will happen. Be patient.